Good evening, everybody. I'm going to attempt to do this video in two parts. I was originally going to do it in one, but I didn't want it to be too long. And I think it's an important one because it's one that we've been hearing about since time immemorial about how XRP can't reach X amount of price because of market cap, because the market cap would have to be too large for that to happen. It's a simple I want to say the research on it for people who use that argument literally type in, can XRP reach $150 per token? And then the first Google search would show, well, no, it can't do that because of market cap and blah, blah, blah. And a lot of that was happening when XRP was hovering in the 40 or 50 cents range. You don't see that shit now because it's trading in the $2 range, about to pop up even higher in the new year. So with this in mind, I want to go over part one is going to be kind of an overall picture of what market cap is, and then how it relates to XRP will be part two. So the outline is always define your terms, and I'm going to define them here. I'm going to show you the difference between small, mid, and large cap, and then I'm going to give you some historical examples, which will hopefully put it in perspective and relate to how XRP fits into a market cap discussion, even in the first place. So let's define the terms. Market caps is short for market capitalization. And if you just look at the basic dictionary definition, it is a value of a company that is traded on the stock market. When you dig a little deeper to a financial dictionary, this is something that represents the total dollar market value of a company's outstanding share of stock. So a formula for that would be you take the total shares outstanding, which you can find just by Googling, you multiply it by the stock price, and that comes up with your market cap. So let's do an example. General Motors Company is a good example of something pretty innocuous. For market capitalization, you take your total shares outstanding, you multiply it by the stock price, you get the market cap. So General Motors has 1.1 billion shares outstanding. Their price per share is $54.31. Therefore, their market capitalization of their entire company, based on the stock price and the shares, is 59.7 billion. It's never going to equal that perfectly when you do it like that, but you're going to be in the ballpark if you either do it right or you have the calculator pressing the buttons correctly. So the market cap size is something that investors need to understand in order for them to invest money. That is true, but it's also a main tool for financial advisors like myself, or even fiduciary advisors like the Series 65 guys who want to steer their clients to a certain risk profile. So when you're dealing with small cap, mid cap, and large cap, a small cap stock is going to have a market cap anywhere between 250 million to $2 billion. And if you want to get something into investing into a mid cap stock, that would be a market cap between the 2 billion and 10 billion mark. And then the large cap is anything over 10 billion. Now, there's other descriptions out there. You got micro cap, if it's less than 250 million, all the way down to very low millions. These are probably startup companies. And then you also have mega cap, which is anything $200 billion or more in their market capitalization. I'm going to focus on the middle three, small, medium, and large, because those are the ones that usually the mutual fund companies will put money into, and also people like myself will steer clients towards not just investing in one stock in each of these categories, but maybe in a basket or bucket of funds that fit into each of these categories. So some of the features with this, a small cap is going to be, these are going to be emerging industries. You're going to get a higher rate of return, but more volatility with it, definitely. So someone who has a higher risk profile and is okay with the roller coaster swings and the ups and downs of the market is usually okay investing in small cap. They're a little more adventurous with the money that they're actually going to be investing with. Whereas a mid cap, in between that 2 billion to 10 billion range, this is a growing company still, and it really just has less market risk than the small caps because it's established themselves to be worth between that 2 to 10 billion mark. And they're usually a regional or national type of company, not so much global like the large caps are. So they have less global risk than some of the large cap companies that you're going to see. A little more brand recognition in mid caps than small caps as well. And then the large cap, anything 10 billion or more. This is definitely brand recognition. You're going to recognize a lot of companies in the large cap bucket. The big thing with a large cap is they have mastered a distribution model for generating those large revenues, which gets that stock price up and which gets the market capitalization up into that 10, 20, 50, all the way up to 200 billion mark. I can show you some examples of different companies and what that could amount to if you're going to invest in them individually. But just remember that mid caps have a good distribution system as well, but large caps have mastered it. As a matter of fact, they're probably the monopoly or the cream of the crop in their industry or in their industry, their niche industry, in order to generate a market cap that size. And some examples of this, small cap, you've probably heard of Kohl's, Guess jeans. I don't even know who the frig still wears these things. They haven't been popular since the 90s. But Guess is a good example of a small cap company that's probably on its way down rather than its way up. And then stuff like really risky stuff like gold mining companies like New Gold Inc. and GD, who have gone the gamut all the way from micro to mid to small, and sometimes within a year or two or three, they're very, very much a roller coaster up and down. Whereas mid caps, Crocs, I don't care how comfortable you are, you still look like an idiot. That's a good example of a mid cap company. CubeSmart, mastered pretty much a local or national identity in the real estate market for storage. And then Dropbox, I'm sure you're familiar with Dropbox and what they've accomplished over the past at least 10 years anyway, with their distribution model. Whereas the large cap, Adobe, BlackRock, Pfizer, if anybody's ever opened a PDF recently, you're going to see some kind of Adobe symbol. If you've dealt with real estate, you're familiar with BlackRock or at least heard of them. And then if you've had medication any time in the past 10 years, I'm sure you're familiar with Pfizer. And these are global companies. This is not just a local one. So looking at this, and let's just look at the history of mega and large caps, particularly Amazon, which is at the $2.5 trillion mark as a mega cap. But 10 years ago, it was below that mega cap line of 200 billion. It was 144 billion, definitely a large cap company. You'll have to go back all the way to 2002 to find it as a mid cap. And then way back in 97, shortly after going public, you'll find it as a small cap company that was still emerging, being a disruptor in the industry, which is what, as we can see now, that Amazon has become. Adobe, another good example of a large cap. Right now it's just under that mega cap line at 196 billion. You'd have to go back to 1999 to find them as a mid cap. And then that first half year that they were public, they actually started out as a mid cap. So about half the year in, you'll find them as a small cap. But that changed because these are not static. You don't get born a large cap, mega cap, small cap, or mid cap. You have to grow into it, and you have to show that you're interested in growing that your business model into that size of it. For the revenue that they've generated and the business model and distribution system that they have. Looking at the mid size of this, let's talk at CubeSmart as a mid cap company, almost into the large cap side. You'll have to go back 12 years ago to find them as a small cap, and then all the way back to 2008 to find them as a micro cap, which is just on that cusp of about 215 million. And then here's the current small cap, New Gold Inc. and GD, gold mining company. It's a small cap now, but it was a mid cap 12 years ago. That shows kind of the volatile nature of small caps in general, but also the mining industry stocks as well. And then you'd have to go back to 2007 to find them as a micro cap. And they have, if you ever want to see an interesting roller coaster, do research on the history of market cap for New Gold Inc. and also the price, because you'll see, they got hit during the 2008 crisis, and then they were up 2,500% in 2009, the year after. So those are the types of roller coasters that small caps will go through. If you've got the stomach to ride that out, you can find some good ones and get some very good rates of return on them. But again, not for the faint of heart. Small caps are really for the bold who want to invest that way. And my takeaways on this, at least from this end, is that market cap is just one data point among many to make investment decisions. So it's primarily used by investment advisors and brokers like myself, really to measure a client's risk profile. I have a whole checklist of things that I go through with a client potentially before we'll sit down and actually put money into anything. But the goal is that if you want to diversify some of the money into a multiple basket of items, you want to get it into large cap, mid cap, and small cap, so you can take advantage of all three. You'll also find out that you can't be a mid cap, large cap, and small cap company at the same time. So you know for a fact that there's no overlap in any of those funds and those baskets of funds that you're investing in if you do it that way. And then they're dynamic, as I mentioned before. They're not static. They will fluctuate by the business models, by market conditions, by growth of a company, by expanding into developing nations, even. There's a lot of things that go into where you would fall on the small, medium, large cap continuum. And as we're going to see with Ripple and XRP, um, using market cap as an argument against why a company can't grow is just friggin' stupid in my estimation. So, in part two, I'm going to go over where XRP fits in this model and why people use market cap as an argument against it going to a very high number, and also at the same time, questions that you can ask others who decide to just throw a market cap out there as a reason why it can't go to 100, 150, $200. Again, you're not seeing that stuff in the search engines anymore because it is at $2 now. So now the light is at the end of the tunnel where they can see it. But they couldn't see it when it was at 40 or 50 cents because of the enormous growth that would have to happen. And I'm going to show you how that can happen. So prepare for part two. Giant hugs, everybody.